It's 6:32 a.m. Eastern, January 23rd, 2026. And 8 days ago, something happened in the Middle East that should have sent every commodities investor scrambling for their phones. On January 15th, while most Americans were focused on domestic politics, silver broke through $90 per ounce for the first time in history. Gold hit a new record above $4,700. And the mainstream financial media explanation? Inflation data came in soft. Fed rate cut expectations. The usual narratives. But that's not what actually happened. That's not what drove silver up 27% in just 14 days. I'm a private commodities analyst. I've been tracking silver markets and geopolitical risk for 12 years. And I built this channel using an AI avatar for one reason: speed. Because when Iran's internal collapse threatens to trigger a regional war that could close the Strait of Hormuz, through which 20% of the world's oil supply flows, you need to understand what that means for silver prices, and you need to act before the panic sets in. Here's what the screens are showing you right now. Silver spot price, $90.88. Gold, $4,615.22. Oil, hovering around $74 per barrel. Everything looks manageable, right? The screen is lying to you, because what's actually happening, what started on New Year's Day 2026 and is accelerating every single day, is that Iran is collapsing from within and the United States is locked and loaded to intervene. And when Middle Eastern conflicts escalate, precious metals don't rise gradually. They gap violently as safe haven buying overwhelms available supply. Let me show you the exact timeline of what's unfolded over the last 3 weeks. December 31st, 2025. Iran's inflation hits 42.5%, sparking the largest anti-government protests the country has seen in years. By New Year's Day, protests spread to dozens of cities. Multiple casualties as security forces attempt suppression. January 2nd, 2026. President Trump issues a warning via social media stating the United States is locked and loaded to intervene if Iran continues using lethal force against protesters. Gold and silver record-sharp gains immediately. January 15th, 2026. Silver breaks $90 per ounce for the first time ever. The move represents a 27% gain in just 14 days, one of the fastest rallies in silver market history. January 22nd, 2026, yesterday. Trump threatens 25% tariffs on any country trading with Iran, putting Beijing, Iran's main trading partner, directly in the crosshairs. This reopens US-China trade tensions while simultaneously tightening the economic noose around Iran. Now here's the part that should terrify you. This isn't the first time the US and Israel have struck Iran recently. In June 2025, they conducted Operation Midnight Hammer, a targeted strike on 3 Iranian nuclear facilities. Iran responded with Operation True Promise 3, launching drones and ballistic missiles. The June conflict caused gold to spike 1.3% to 1.7% in a single day, hitting $3,427 per ounce. Silver held above $36. Brent crude soared 5% to 11% as fears of Strait of Hormuz disruptions intensified. But here's the critical difference between June and now. Iran's government is collapsing from within. This isn't just a military strike in response. This is a regime crisis combined with US military threats, combined with economic sanctions, combined with potential oil supply disruptions. And when you stack all 4 of those crises simultaneously, precious metals don't just rally, they explode. Act 2. The mechanism. Let me walk you through exactly how Middle Eastern conflicts drive silver prices through mechanisms that most investors completely misunderstand. Here's what safe haven demand actually means in practical terms. When geopolitical instability spikes, whether it's war, terrorism, regime collapse, or supply chain disruptions, investors flee risk assets, stocks, corporate bonds, emerging market currencies, and flood into safe haven assets, gold, silver, US treasuries, Swiss francs. But here's the key. Not all safe haven assets perform equally. And in the current Iran crisis, silver is outperforming every other option by a massive margin. Let me show you the numbers from the last 3 weeks. Gold's performance, January 1st to January 15th, plus approximately 8 to 10% silver's performance, January 1st to January 15th, plus 27% silver's outperformance versus gold, nearly 3 times. Why is silver outperforming gold so dramatically? Because silver has dual demand that gold doesn't have. Monetary demand, safe haven buying during crisis, plus industrial demand, oil price spikes create inflation fears, which drives solar/EV build-out, which consumes massive amounts of silver. Let me give you an analogy that makes this crystal clear. Imagine there's a hurricane approaching your city. Everyone rushes to the grocery store to stock up on supplies. 2 things happen simultaneously. 1. Bottled water sells out, safe haven necessity. Everyone needs it for survival. 2. Generators sell out, industrial necessity. People need them to keep critical systems running. Gold is the bottled water. It's a pure safe haven play. When crisis hits, people buy gold to preserve wealth. Silver is both the bottled water and the generator. It's a safe haven asset plus an industrial commodity critical for the energy transition that accelerates when oil prices spike. Now let me show you the oil-silver connection that most investors completely miss. The Strait of Hormuz, the narrow waterway between Iran and Oman, handles approximately 20% of global oil supply and 30% of seaborne traded oil. If Iran closes or disrupts that strait, which they've threatened to do multiple times, oil prices don't just rise, they explode. Analysts are already forecasting that if the US gets officially involved in a widened conflict, oil could hit $90 to $100 per barrel within weeks. Some are predicting $110 plus if the strait closes. And here's where the silver multiplier kicks in. When oil hits $100 per barrel, inflation expectations surge. Governments panic and accelerate green energy transitions to reduce oil dependency. That means solar panel installations accelerate. Each panel requires 20 to 25 grams of silver. EV adoption accelerates. Each EV requires 25 to 50 grams of silver. Energy storage systems accelerate. Battery systems use silver contacts. So you get a feedback loop. 1. Iran crisis to oil spikes to inflation, fears to safe haven buying, gold plus silver. 2. Oil spikes to green energy acceleration to industrial silver demand, surges. 3. Both dynamics hit simultaneously implies silver gaps violently higher. Let me run the actual math on what this means for silver prices. According to commodities analysts quoted in recent reports, if the US officially joins the conflict and it widens, conservative scenario, silver breaks $40 per ounce. We're currently at $91, so this analysis is outdated. Silver has already blown past $40. Moderate scenario, silver approaches $45 per ounce and potentially higher. But those forecasts were made when silver was at $36. We've already surged to $91. So let's extrapolate using the same methodology. If silver was expected to hit $45 from $36, a 25% gain, in a widened conflict, and we're now starting from $91, a similar 25% gain takes us to $113.75. But that's the conservative case, because the industrial supply deficit that exists now didn't exist when those earlier forecasts were made. China's export controls took effect January 1st. Comex registered inventory is at historic lows. Industrial demand is accelerating. A more realistic scenario. Silver hits $130 to $150 if Iran closes the Strait of Hormuz and oil spikes to $100 plus. Now let me show you the inflation mechanism that compounds everything. Iran's internal inflation hit 42.5% in late 2025. That's not a typo. 42.5%. Food costs doubling in months, currency collapsing, savings evaporating. And when inflation gets that severe, governments lose control. Citizens protest, regimes fall, and regional instability spreads. If Iran's regime collapses completely, here's what happens. Scenario 1. Power vacuum. Iran fragments into competing factions. Regional players, Saudi Arabia, Turkey, Israel, intervened to secure interests. Oil production disrupted for months or years. Prolonged price spike. Scenario 2. Hardline takeover. Revolutionary Guard seizes full control, becomes more aggressive toward U.S. interests in Israel. Escalation accelerates. Strait of Hormuz becomes permanent flashpoint. Scenario 3. Western intervention. U.S./Israel conduct regime change operation. Massive military deployment. Oil markets panic on supply disruption fears. Prices spike regardless of actual physical disruptions. All three scenarios are massively bullish for silver because they all create the same dynamics. Higher oil prices, higher inflation expectations, accelerated green energy transitions, and safe haven capital flows. Act 3. The historical blueprint. Now let me show you exactly what happened to silver prices during past Middle Eastern conflicts. Because this isn't speculation, we have historical data that tells us exactly how silver performs when these crises escalate. Gulf War, 1990 to 1991. When Iraq invaded Kuwait and the U.S. assembled a coalition to liberate it, oil prices spiked from $20 to $40 per barrel. Gold rallied approximately 8%. Silver rallied harder, gaining over 15% in the initial crisis phase. The gold-to-silver ratio compressed from 100 to 1 to 85 to 1 as silver's industrial demand profile, even back then, gave it additional upside. Iraq War, 2003. In the lead-up to the U.S. invasion, gold rose approximately 12% on safe haven buying. Silver rose 18%. The ratio compressed again as industrial users panic bought to secure supply ahead of expected disruptions. Now let me address the skeptics, because I know exactly what Wall Street analysts are saying. Skeptic argument number 1, Iran tensions have been ongoing for decades. This is just more noise. Markets will ignore it. Here's the rebuttal. Iran's internal collapse is unprecedented. We've seen U.S.-Iran military tensions before, but we've never seen 42.5% inflation trigger regime-threatening protests while the U.S. is simultaneously locked and loaded in threatening 25% tariffs on Iran's trade partners. This is a perfect storm of internal crisis plus external pressure, plus economic sanctions, plus military threat. That's not noise. That's a structural shift. Skeptic argument number 2. If conflict escalates, it'll hurt industrial demand for silver because global growth will slow. This argument misunderstands the timeline. Yes, prolonged war eventually hurts growth, but in the initial 6 to 12 months, war accelerates certain sectors. Defense manufacturing uses silver in electronics, radar, missiles. Energy infrastructure, accelerated solar/wind to reduce oil dependence. Strategic stockpiling, governments and corporations hoard critical materials. By the time industrial demand actually slows, 12 to 18 months into a prolonged conflict, silver will have already doubled or tripled from current levels. Skeptic argument number 3. Gold is the real safe haven. Silver is too volatile and industrial to benefit like gold does. This is the most common misconception. Yes, gold is less volatile, but volatility cuts both ways. During the June 2025 crisis, gold rose 1.7% in a day. That's a nice gain. But silver's volatility means it can rise 5 to 10% in a single day during acute crises. And over longer time frames, weeks to months, silver's industrial demand component gives it sustained upward momentum that gold lacks. Act 4. The battle plan. Let me share my personal positioning based on the Iran crisis and the geopolitical data I'm tracking. And I need to be very clear. This is not financial advice. This is what I'm doing with my own capital based on 12 years of tracking these markets. I'm watching 5 specific triggers that will determine my actions over the next 30 to 60 days. Trigger number 1, if oil breaks above $85 per barrel and holds for 3+ consecutive days, I'm increasing my silver allocation by 40%. Oil is currently around $74. If it breaks $85, which signals that Iran supply disruption fears are materializing, I'm adding aggressively to physical silver and mining stocks. Why $85? because that's the psychological level where industrial buyers start panic buying energy transition commodities. Solar, EV, battery companies all accelerate procurement at $85 plus oil. Trigger number 2. If Trump announces direct military action against Iran, airstrikes, naval blockade, boots on ground, I'm going maximum conviction on physical silver. Right now, Trump is at the locked and loaded warning stage. If he moves to actual kinetic military action, safe haven flows will explode. And I want maximum exposure to the highest beta safe haven asset, which is silver. Trigger number 3. If Iran threatens or attempts to close the Strait of Hormuz, I'm rotating 30% of my gold holdings into silver. This is the nuclear option. If the strait closes, oil goes to $100 plus within days. Inflation expectations spike globally. Green energy transitions accelerate. And silver, with its dual demand profile, outperforms gold by 2 times to 3 times. Trigger number 4. If physical silver premiums exceed 20% over spot for more than 5 consecutive days, I'm avoiding all paper silver exposure. Physical premiums are currently elevated, 10 to 12%. If they hit 20% and stay there, it means the physical supply crunch is critical. At that point, I want zero exposure to ETFs that can cash settle. Physical only, or PSLV, which offers physical redemption. Act 5. Emotional close. The window is closing, not in months, in weeks, maybe days. Iran is collapsing from within, inflation at 42.5%, protests in dozens of cities, security forces killing civilians, the United States locked and loaded to intervene, Trump threatening 25% tariffs on anyone trading with Tehran, and silver has already responded, plus 27% in just 14 days, breaking $90 for the first time in history. But here's what most investors are missing. This is just the beginning. The mechanisms that drive silver during Middle Eastern conflicts are accelerating. Oil at $74, heading toward $85 to $100 if Strait of Hormuz is threatened. Safe haven flows crushing into precious metals as war risk spikes, industrial buyers panic hoarding to secure supply before disruptions. Green energy transitions accelerating to reduce oil dependency. Physical silver premiums widening as dealer inventories vanish. Look at physical premium data. If you see what I'm seeing, if the data confirms the crisis is real and accelerating, then you have a decision to make. The smart money is already positioned. Hedge funds bought gold and silver before the January 2nd crisis went public. Central banks have been accumulating for months. Industrial buyers are quietly securing supply. By the time CNBC runs a special titled, "The Iran War in Your Portfolio," by the time Bloomberg explains why silver broke $100, by the time your financial advisor suggests maybe 5% in precious metals, the opportunity will be gone. You'll be buying at $130 while early movers bought at $91. You'll be paying 30% premiums on physical while today's buyers pay 10%. You'll be watching the largest crisis-driven precious metals rally in modern history from the sidelines. I've been tracking silver for 12 years. I've seen manipulation, false breakouts, crushing corrections, and geopolitical noise that amounted to nothing. But I've never seen Iran's government collapsing from 42.5% inflation while the US is locked and loaded to intervene and threatening to close off Iran's trading partners with 25% tariffs, all while silver just broke $90 for the first time ever. The crisis is real. The mechanisms are activating. The historical playbook is clear. Watch the triggers I outlined. Watch oil prices. Watch Trump's statements. Watch physical premiums. Watch what happens when the Strait of Hormuz becomes the focal point of global attention. And most importantly, ask yourself, if this crisis escalates to direct US military action or strait closure, where will silver be in 30 days? 60 days? 90 days? The answer is in the data. The Iran regime is collapsing. The US is prepared to intervene. Oil supply is at risk. And silver is the highest leverage asset to all 3 trends simultaneously. Thanks for watching. Leave a comment. Are you positioning for Iran crisis escalation? What's your take on the oil-silver connection? This is the inflection point. This is where investors either protect wealth with hard assets during geopolitical chaos or watch their portfolios get destroyed when the crisis goes kinetic. The warning signs are everywhere. The question is whether you're listening. I'll see you in the next one. Stay sharp.